Welcome back, everyone. Halloween's coming up soon and the markets are getting a little spooky.
Yeah, lots of investors feeling cautious.
Definitely. Seems like everyone's looking for those safer bets, the ones that'll hold strong even if things get a bit, well, bumpy. We're talking defensive trading, right?
Exactly.
So today, we're diving deep into three companies that might surprise you. We've got TeraWulf, WULF,
Interesting one.
Marathon Digital Holdings,
Yeah.
MARA, and, of course, the giant, Amazon, AMZN.
Quite a mix.
They might seem like an odd group, but they all have something unique to offer those cautious investors.
It's a really good way to see how playing defense can look so different, depending on what you're actually aiming for.
Absolutely.
Yeah.
So we're going to unpack what makes each of these companies potentially attractive right now. And I think we might uncover some really fascinating details along the way.
Oh, I think so too.
All right, let's kick things off with TeraWulf. Now, this one really caught my eye. They're a Bitcoin mining company.
Okay.
But here's the twist. They're doing it sustainably.
No, that's interesting.
Yeah, they use nuclear, hydro, even solar power.
Huh.
Did you know Bitcoin could be eco-friendly?
I have to admit, that's not usually the first thing that comes to mind.
Right. It's pretty cool.
Yeah, it's a big deal, especially with all the concern about Bitcoin's environmental impact. TeraWulf's really tapping into that demand from ESG-focused investors.
It's more than just being green, though, right? It seems like a smart business move, too.
Absolutely. It's strategic.
So, besides appealing to those eco-conscious investors, how does this sustainable approach actually help TeraWulf's bottom line?
Well, renewable energy sources can offer more stable costs compared to those, fossil fuels. Those can be pretty volatile.
Oh, for sure.
So in times like these, when the economy is uncertain, that predictability can be a huge advantage. Though it's not as simple as just plugging into a solar panel.
Right. I imagine building and maintaining all that renewable energy infrastructure has its own costs and challenges.
Exactly. It's not a magic bullet solution.
Definitely something to consider. Okay, let's shift gears to Marathon Digital Holdings. They're one of the largest Bitcoin miners in North America, focusing on scaling up and being as efficient as possible.
Makes sense.
I mean, even with the market being jittery, there's still a lot of faith in Bitcoin's long-term potential.
Oh, absolutely. There's a lot of people still bullish on Bitcoin. Marathon gives investors a way to tap into that growth, but with a focus on stability and transparency.
Which makes them attractive to institutional investors.
Especially institutional investors, they really value that.
That makes a lot of sense. So for investors who like the idea of Bitcoin but maybe want a smoother ride, Marathon offers a different way to play. What specifically about their approach appeals to those big institutional investors? You mentioned stability and transparency.
Regulation, that's a big one. Marathon has prioritized regulatory compliance, which is huge for institutional investors who need to be absolutely sure they're on solid ground legally and ethically. For example, they've been very proactive in working with regulators to set clear guidelines.
So it's not just about riding the Bitcoin wave, it's about doing it responsibly and in a way that can last.
Exactly. It shows that the cryptocurrency world is maturing, and companies like Marathon are leading the way toward more mainstream acceptance.
Okay, lastly, we have the big one,
Hmm.
Amazon. I mean, everyone knows Amazon, right? Their shopping is everywhere.
Ubiquitous.
But when it comes to playing defense, they have a whole lot more going on.
That's right.
Like what?
One of Amazon's biggest strengths is its diversity of revenue. They're not just e-commerce. There's AWS, their cloud computing arm, which has been growing like crazy. Then there's streaming, AI development, even physical grocery stores now. They're not putting all their eggs in one basket.
Right, so they can weather those market shocks.
Exactly. They're resilient.
It's like they have a whole bunch of defenses ready for any storm. But let's break that down a bit. Everyone knows about their e-commerce dominance, but you mentioned AWS being a major player. Can you expand on that? What makes that side of their business so compelling, especially for a defensive strategy?
Well, what's interesting about AWS is that it's become essential to the internet as we know it. I mean, countless businesses, organizations, even governments rely on AWS for their cloud computing. This isn't just about selling stuff online, it's providing the basic infrastructure of the digital world, which, as we all know, is only getting bigger. It is. It really is.
So even if one part of their business slows down, they have others to pick up the slack. It's like a diversified portfolio, but for a company.
Mm-hmm.
And of course, there's Amazon's, well, let's face it, seemingly endless cash.
Yeah, their financial strength is definitely a big factor. It lets them not only handle tough times, but also keep investing in future growth. And that's reassuring to investors.
Right.
That kind of stability is priceless when things are uncertain.
It really is. Okay, so we've looked at these three companies, all approaching defense a little differently. What are some of the things they have in common? What are the key traits of a defensive stock based on what we've seen here?
Yeah, that's a good question. We've touched on a few already. Stable earnings are huge. You don't want to be on a roller coaster every quarter, right? Then there's having a strong position in the market, not being easily pushed around by competitors, and of course, consistent demand. You want your product or service to be needed no matter what's happening in the wider economy.
So while everyone else is running for cover, these defensive companies are calmly reinforcing their foundations. Which of these defensive strategies resonates most with you?
Well, it all depends, really, on your individual goals, your risk tolerance. If you're all about sustainability, TerraWolf's approach might be the most appealing.
Right, it's like, hey, I can invest in Bitcoin and feel good about it. That's a pretty powerful combo.
Exactly. But for someone more excited about cryptocurrency's growth, but maybe wanting something a bit more stable than just buying Bitcoin itself, Marathon might be a good fit.
Because they're not betting on just the price fluctuations, they're more focused on the infrastructure behind it.
Precisely. And then you have the investor who really prioritizes that proven track record, who wants to know their investment is with a company that can handle almost anything. That's where Amazon shines.
You know, it's funny because while Amazon might seem like the obvious choice, people often underestimate just how much of a defensive powerhouse they are. They've got a hand in almost everything.
That's the beauty of diversification, right? It's like a shield against that market volatility, and Amazon has mastered it.
Okay, let's say I'm convinced and want to add some defensive stocks to my portfolio. Besides these companies, what other industries or business models should I be looking at? Any tips?
Sure, think about sectors that provide essential goods or services. No matter how the economy is doing, people always need food, healthcare, utilities.
So grocery stores, pharmaceutical companies, that sort of thing.
Exactly. Those types of companies usually have pretty stable earnings because demand for their products stays pretty consistent.
Makes sense.
hmm
What else?
Another thing to consider is companies that have strong pricing power. They can raise prices without losing a ton of customers. Think brands with really loyal fans or products with very few alternatives.
Like luxury goods, maybe, or specialized software that businesses depend on.
You got it. These companies have a kind of built-in buffer against inflation. They can pass those rising costs on to their customers.
So essential goods and services, strong pricing power. Any other defensive signals I should be watching for?
Definitely keep an eye on debt levels. Look for companies with low debt.
Why is that so important from a defensive point of view?
Well, think about it. When the economy takes a dip, companies carrying a lot of debt can really struggle. They have to make those interest payments, regardless of how their business is doing.
So less debt means more flexibility to adjust and weather the storm.
Precisely. It's a sign of stability and resilience, which are essential for a defensive stock.
Low debt, got it. Anything else? You're like a defensive investing guru.
Oh, I wouldn't say that. But one more key thing is a company's dividend history.
Ah, dividends. Those nice little payouts companies make to their shareholders, how do those fit into a defensive strategy?
Companies that consistently pay dividends and even increase them over time show that they're committed to returning value to their shareholders.
It's like they're saying, hey, we're doing well and we want to share the wealth.
Exactly. And remember, these are just starting points, okay? Always do your own research, your own due diligence before investing in any company. Hopefully, though, this gives you a clearer idea of what to look for when building a defensive portfolio.
It really does. It's like getting a little reward for sticking with them during those uncertain times.
That's a good way to put it. That reliable income can be really attractive during a downturn. It brings some peace of mind.
This has been incredibly insightful. I feel like I have a much better understanding of defensive investing now, thanks to you, of course.
Happy to help. And remember, the most important thing is to invest in what you understand and what aligns with your own personal financial goals.
Couldn't have said it better myself. Before we wrap things up, I want to leave our listeners with something to chew on. We've talked about specific companies and industries, but let's zoom out a bit. What are some of the larger trends we're seeing in the investment world, and how might those trends create opportunities for defensive investors?
Ooh, that's a great question. We're living in a world of rapid technological change, changing consumer preferences, and shifting demographics. All these forces create challenges and opportunities across every sector.
So it's not just about picking the right companies, it's about understanding the bigger picture, the forces shaping the market.
Exactly. And for those who can anticipate those forces, who can position themselves accordingly, there's great potential for building a resilient and rewarding portfolio, even when markets feel unpredictable.
That's a great point. Thanks again for joining us on this deep dive into defensive trading. And to all our listeners, stay curious, stay informed, and as always, happy investing. It's like getting a little reward for sticking with them during those uncertain times.
Yeah, exactly. And during a market downturn, that reliable income stream can be really appealing. It provides a sense of stability.
This has been incredibly insightful. I feel like I've gained a whole new level of understanding about defensive investing, thanks to your expertise, of course.
You're very welcome. It's always a pleasure to share these insights. Remember, the most important thing is to invest in what you understand and what aligns with your own personal financial goals.
Well said. Before we wrap up this deep dive, I want to leave our listeners with something to think about. We've discussed specific companies and industries, but let's zoom out for a moment. What broader trends are shaping the investment landscape, and how might those trends create opportunities for defensive investors?
That's a fantastic question to consider. We live in a world of rapid technological advancements, evolving consumer preferences, and shifting demographics. These forces create both challenges and opportunities across every sector.
So it's not just about picking the right companies, but also about understanding the bigger picture, the forces driving the market.
Precisely. And for those who can anticipate those forces and position themselves accordingly, there's great potential for building a resilient and rewarding portfolio, even when the markets feel a bit unpredictable.
That's a great way to put it. Thanks again for joining us on this deep dive into defensive trading. And to all our listeners out there, stay curious, stay informed, and, as always, happy investing.